This stock is being completely ignored right now. EBITDA up 430%? Here's why. And honestly, I think that's one of the biggest mistakes the market is making in 2026. Now, I'm not going to name this company directly. Not yet. But let me give you a hint. Think of a name that sounds like a proud European animal. Something that wakes up before the market does. Call it the Rooster Group. This is a 200-year-old Belgian industrial giant, listed right here on Indian stock exchanges. And most people, they've never even heard of it. Let's change that, right now. So here's the story. For the past few quarters, this company was deep in the red. Losses, quarter after quarter. The kind of numbers that make retail investors run away and never look back. December 2025, loss of 8.92 crore. March 2025, loss of 2.91 crore. And before that, red, red, red. Then, March 2026 happened. And I am not exaggerating when I say everything changed. In one quarter. Revenue shot up 56% year on year. EBITDA swung from minus 19.7 crores to plus 4.91 crore. Net profit from a loss of 8.92 crores to a profit of 7.36 crore. And EPS, earnings per share, went from minus 18.06 to plus 14.91. That is not a normal quarter-on-quarter improvement. That is a reversal. And reversals like this, they don't stay quiet for long. Now, you might be wondering, okay, one good quarter. So what? Companies have good quarters all the time, right? Fair point. But here's why this one is different.
However, there is an honest risk. Execution
what does this
risk.
company actually
One good quarter
do?
is not a guarantee.
It builds
the
defense
test
systems,
is sustainability.
it builds green
if orders don't
hydrogen
convert
plants,
or global
it does
demand
heavy
slows,
industrial
the stock could give
engineering
back
at a
gains.
scale almost
This is a
nobody else in
high-reward,
India can
high-risk
match.
situation.
Defense,
So small position
green
sizing
energy,
is the smart
industrial
play. Please
infrastructure,
remember, this
those
is not
are
SEBI
literally
registered
the
advice.
three
Do your
hottest
own
sectors
research.
that the Indian government
is
is
this
pumping
stock
money
worth
into
watching?
right now.
Revenue,
And this
EBITDA,
company
net
isn't just an
profit, and
Indian
EPS
player.
are all
It
up
has the
dramatically.
full backing
The
of its
turnaround is
European
confirmed.
parent,
It
with
operates
over
in the hottest
200
sectors
years
and
of
is parent-backed.
technology, IP,
Remember to
and
watch the
global
trend,
contracts
not just the
flowing
single
through
number.
it.
The next
Think of
quarterly
it
result
as
is
a
the real
backdoor
test.
entry into
Like and
global
subscribe if you
industrial
want the
growth,
next quarter
sitting
breakdown
right
first.
there on your Indian demat account. Okay, now this is the part most people miss, and this is why I think the market is wrong about this stock right now. When retail investors see a company that's been posting losses for multiple quarters, they put it on a blacklist. They stop checking, they stop caring. But experienced investors, they watch for exactly this moment. The moment when the trend flips. Because here's the truth about stock markets. Markets don't price what happened yesterday. They price what's going to happen next. And if this company just delivered its first profitable quarter after multiple quarters of losses, the question isn't, is this real? The question is this the beginning? 3 things tell me it might be. 1, the order book is growing. Defense and green hydrogen orders from both Indian and global clients are piling up. That means revenue visibility going forward is strong. 2, the parent company is not abandoning this entity. They're injecting capital, technology, and trust. That is not what a company does when it's giving up. 3, there is almost no direct competition for what this company does in India at this scale, which means pricing power, which means margins, which means more profits if execution holds. So, what's going to move this stock? What should you watch for? Number 1, the next quarterly result. 1 good quarter is hope. 2 good quarters is a trend. 3 is a re-rating event. The next result is the single most important data point to watch. Number 2, any large order announcement. If they win a defense contract or a green hydrogen deal above 500 crores, the stock will react hard. Number 3, any action from the Belgian parent. If the parent company increases its stake or announces a new technology transfer to the India entity, that's a massive vote of confidence. And number 4, the sector tailwind. India's defense and green energy budgets keep rising every year. Every government announcement in these sectors lifts this kind of company, even before they've done anything. Now, I always give you the risk, and I'll be straight with you. This company has been loss-making for a long time. One turnaround quarter is exciting, but it is not a guarantee. If orders don't convert into revenue, if global industrial demand slows down, if costs spike and margins compress again, this stock could give back its gains just as fast. So, what's the smart play here? Don't go all in. This is a watch and confirm situation. Small position, if any, and the next quarterly result will tell you everything you need to know. If they post profits again, the conviction builds. If they slip back into losses, you've avoided a trap. That's how you play a turnaround story responsibly. So let's bring it all together. A 200-year-old European industrial company, listed in India, operating in defense, green hydrogen, and heavy engineering. 3 sectors where India is pouring money right now. For multiple quarters, it was bleeding losses. Then March 2026 hit, and the numbers flipped. Revenue up 56%. EBITDA up 430%. Net profit up 332%. EPS up 353%. The market hasn't fully noticed yet. The institutional money hasn't moved yet. The retail crowd is still scared of the old red numbers. But here's the thing about being early. It only feels uncomfortable until it doesn't. The Rooster Group is crowing. Whether the market is listening, that's the question. If you want me to cover the next quarterly result the moment it drops, hit subscribe. And if you found this useful, share it with one person who actually cares about finding these kinds of stories before the crowd does. I'll see you in the next one.